The world's financial system rarely changes course because of a single document. But when that document quietly redefines what counts as law inside America's regulatory machinery, the consequences can ripple far beyond Washington, into Wall Street trading floors, global credit markets, and the banking system itself. This morning, a new line of scrutiny has emerged around the Federal Reserve and its supervisory power, after questions tied to a Government Accountability Office determination began circulating through policy circles in Washington. At the center of it is something that sounds technical on the surface: agency guidance, but in practice may determine how banks are regulated, how loans are approved, and how risk is measured across the entire U.S. financial system. The issue goes back to leveraged lending guidance, internal supervisory standards used by regulators to evaluate risk-taking in banks. According to the GAO's interpretation under the Congressional Review Act framework, certain forms of agency guidance may legally qualify as rules, meaning they should have been submitted to Congress for review. If they were not, they could be considered procedurally invalid. That distinction between what is guidance and what is binding rule has now become the center of a quiet but potentially explosive regulatory debate. Inside the banking sector, some institutions have reportedly continued treating supervisory guidance as if it carries the force of law. Matters requiring attention, known inside the system as MRAs, are still being issued and acted upon under frameworks that critics now argue may lack formal congressional approval. The Federal Reserve, for its part, has publicly maintained a firm position. Guidance is not binding regulation. Officials have emphasized that supervisory standards are meant to inform judgment, not replace formal rulemaking. Yet the gap between that official position and how banks behave in practice has raised deeper questions about how regulatory power is actually exercised inside the U.S. financial system. Because if guidance functions like a rule, but is not treated legally as one, then an entire layer of financial governance may exist in a gray zone between authority and enforceability. And that is where this story begins to widen.